Okay, Mayuresh, hi, good afternoon. Let's talk about some stocks. Dr. Reddy's is a bit weak, but it's rallied a bit from the recent lows. What's your advice on this one?
Afternoon, Anuj. Again, numbers expected and numbers expected to be soft on the US generic side of business, more to do with the kind of pricing pain that one really expects because of competitive pressures, both in terms of key drugs. But largely, I think my take has been that the stock has moved up significantly over the last few weeks. But if you look at the next 2 years' performance, if one really assumes that the remediation issues on 3 of its key plants should start getting resolved over the next few quarters, you will have a big earnings momentum come through for FY18. Couple that up with the huge generic pipeline that Dr. Reddy's has got, more than 52 para IVs, he's got more than 18 FTFs, and that itself is a pretty big addressable market size that Dr. Reddy's is currently contemplating. Third, the domestic business is on a strong footing, and though you might have some amount of domestic concerns, the domestic business is expected to do well. So numbers expected to be soft. The stock has moved up. If it does correct, probably after results, assuming that the results are a little bit soft in terms of all the conditions laid out, my own sense is for long-term investors, I think an earnings growth of 13-14% over the next couple of years is not ruled out. Assuming the India business doing well, the US generic business growing at 15-16%, you might actually have earnings growth of 13-14% to say the least for the next 15 months. So I remain optimistic on the stock, but numbers expected to be a little bit soft, both in terms of top line as well as at the EBITDA front.
Okay, gentlemen, stay on with us. Our closing bell money control question of the day is: see tough 3 to 6 months for markets as earnings growth tepid, says Kotak AMC is Nilesh Shah. Do you agree? Log on to moneycontrol.com and post your responses, and we'll read out some of the most interesting ones post 3:30.
So far, whatever results have been declared, majority of them, including from private sector banks, have been below street expectation. But this is probably a pause in a longer term bull market. We are seeing liquidity being pumped into the economy as well as into the market. We are seeing interest rates being cut at the borrower level. The monsoon has been good after 2 years, and that will support recovery in economy. Our exports have started bottoming out, and in the days to or in the months to come should start performing well. It's not a cheap market anymore. In fact, it is little bit on a fair value plus level. So you'll have to extend your horizon to make money.
Hi guys, welcome back to the show. It's a really good market, still up almost about 1% and lots of result reactions is what we're seeing on the screen. We spoke about Navin Fluorine and how that stock is spiking up post numbers. The other good set of numbers that came in this quarter are from transformers and rectifiers. Strong earnings, a good turnaround for the company, and that stock too is up almost about 3-4% right now. Mr. Tulsian, what are your thoughts on this one? You've been tracking it for a while. What did you make of the earnings, and at 350, how does the risk reward look?
See, Sonia, very good numbers, and actually what I'm impressed with the numbers is the top line increase, because if you see closer to about 160 crore top line, I'm comparing on YOY basis, because there is no point in comparing with Q4 where you see the maximum order execution, and apart from that the operating profit, which was negative at 12 crore in the same quarter last year, we have seen positive of 9 crore, and actually this is what I have been maintaining in case of the transformer makers, that the turnaround has really happened in a big way. Actually on Monday, last Monday we have seen disappointment from Bharat Bijli, where we have not seen the top line growth, and actually because of that there has been no, so I am not able to reconcile that what was the reason. But yes, going back to the theme of the transformer makers, this transformer rectifier numbers are really looking very good, and one has to keep an eye on the other similar companies like maybe Indotech Transformers or maybe Alstom T&D or maybe Voltem Transformer. They all are looking very good, and probably they may post the similar kind of results what we have seen from Transformer and Rectifier.
Okay, Sandeep Wagle is also with us. Sandeep, hi, good afternoon. So what's the word on the index now and your closing strategies?
Afternoon, Anuj. I think the Nifty is going to go further. Probably 8700 now is in sight, but I would wait for maybe at least a 20-30 point correction to buy into. More stock specific. Stock specific, a buy in a Z Entertainment, stop loss 466, target 495. A buy in a Marico, stop loss 275, target 291. And a buy in a Allahabad Bank, stop loss 77, target 84.
Okay, Sandeep, thanks a lot for those trading ideas. Well, is the government looking at a mega merger of PSUs in the oil and gas sector? Sources indicate that an exploratory note has been floated by an official of ONGC, which proposes combining public sector oil and gas companies into one single vertical. Is that feasible, and how can things move from here? To discuss that, we have with us S.C. Tripathi, former oil secretary. Mr. Tripathi, good afternoon. Of course, you have been at the helm of affairs for long. Do you think this kind of mega merger makes sense?
Various options that the government has in front of itself, and what your suggestions are as well. Anuj, you followed this story for over a decade now. What's your take on the issue?
My take is that these companies should not be listed in the first place because if these companies are to be treated like the government owns them, and depending on what happens to the crude prices, if you want to treat the companies like that, then you have no business having public shareholders. I'll just give you some examples, Sonia. ONGC in 2007 traded at 320. It's now 226. What's the 8-year return for a long-term investor? Minus 29%. We've all been talking about big oil marketing company rally. Just look at IOC, for example. December 2007, it was at almost 400. Now it's at 540. What's the 8-year return? 35%. Fixed deposits have done far better. Now look at HPCL, and this is the point I want to make, because this March 2004, the stock was at 500. March 2014, the stock was at 320. What was a 10-year return? Minus 37%. But from that point, what's been the return till now? In just 1.5 years, it's been a 6-bagger. And that's because all of a sudden crude has turned, and there were a couple of policies in terms of petrol being free and diesel being free, and that's led to this kind of re-rating. But what's the guarantee that in 2017 or 18 crude won't go back to 150, 160 and the same policy will come back? So these are at best trading plays. There's a big cross subsidization which happens. That's the biggest problem for some of these PSU oil and gas companies, and that is why a lot of people don't have these as portfolio stocks. These stocks will have their phases, like HPCL and BPCL are having their phases right now, where they've given you 5x, 6x, 10x returns. That could change on a dime if crude. Right now, we're all assuming that crude stays between 40 to 50. That's a big assumption to make, and that's my take, honestly, if you ask me.
Okay, let's get Mr. Tulsian's view on this as well, because he tracks the sector closely. Mr. Tulsian, there are various permutations and combinations being spoken about right now, and the talks, we understand, have begun between the government officials of a merger of some sort. What would your view be on this, and how should shareholders approach this situation?
See, Sonia, I don't think that this is, or I could say that this is just a wishful thinking. If I just need to take the exploration company ONGC and Oil India. Oil India is exactly 10% of ONGC. So what you will do, either you create two parallel companies, with the point to point. That means ONGC may have the merger of HPCL and BPCL with them. So you will be having a market cap of closer to 4 lakh crore, or maybe in the terms of the matching capacity. Then what will remain with Oil India? Will they acquire IOC? So now I honestly don't see any reason happening on that account. Because in the past, if you see, IBP got merged with IOC, that was fine, and that is why you have seen marketing outlet of IOC being combined of HPBP plus maybe 20-30% extra. Now come on the exploration and the refining. Both are independent business. It is just wrong to say that exploration should fall on refining or refining should fall on exploration. Take the case of Reliance Industries. They have legitimately proved that refinery can be an independent and profit-making business. And what we have in HPCL, BPCL and IOC 50 million ton, HPCL 15 million ton, BPCL 20 million ton. So I don't understand that can there be merger of all the refining companies? Can there be merger of part of the exploration company with the refining companies? I don't think that all these things will really work. Then coming on the Anuj's point, come on the subsidy part. Now instead of asking for the ONGC, the upstream company, to share the subsidy burden when the crude prices moves to a level of 80, 90, 100 or maybe 120, government should come out with a very clear guideline that they will not fall back for any kind of this subsidy sharing at the end of each each quarter on the upstream companies. Instead, what government should do that on a real-time basis, keep increasing the cess on the crude. So what optically will be looking to the shareholders of the company that nothing has been shared by ONGC, and definitely in that situation, even if ONGC has shared some part of income as the under recovery of the oil marketing companies, or maybe to supply crude to refining companies, then also it will be seen positive for the ONGC. And in turn, what will happen if ONGC is making good profit? Government is ultimately the beneficiary. They will get 30% as a income tax, or maybe 33% as income tax. Then they will be getting dividend. Then they will be getting dividend distribution tax. Now come on the refining companies alone. Now we are talking of the petrol and diesel having deregulated. Now we are expecting that this administered price in any situation will come back. So suppose if God forbids crude goes to $100, will this oil marketing companies will be able to pass on the entire increase to the consumers? I really doubt very much at that point of time. Any government who will be there at the center will not have courage to say that we are not bringing in the administered pricing mechanism back. So these are all just a wishful thinking. The notes can all get prepared, but honestly I don't see any reason or any logic in merging the exploration and refining both, and there are no permutation combination which are being worked out or which are being seen between the companies which are listed on the stock exchange, that is ONGC, Oil India on exploration, marketing is IOC, BP, HP, and pure refinery are Chennai Petro or maybe MRPL kind of thing. So I don't see honestly any logic in this move, and this can never get implemented, and if it is done, it will again be seeing a big mess getting created.
Oh, yes, Mr. Hussain, that point is taken. So that's on oil and gas stocks. But the market, by the way, is now at high point of the day. And look at that surge again. The Sensex is now up 300 points. The Nifty is approaching a 100-point rally. And of course, the Bank Nifty is up about close to 2%. And Bank Nifty actually has led this huge rally intraday that you have seen. In terms of some other stocks, pull out the intraday chart of Infosys, even that's contributing now. Reliance is participating, TCS is participating. So it's a multi-pronged attack by the bulls right now, maybe to take out even the 8654 mark, which would mean not just 52-week high, but some 16-month high for the index. Sudarshan, so what's the trading stop loss now? It's 8636 now. Does it have to be deep considering the kind of run we have seen, or do you trail it to 8600?
No, not 8600, but it doesn't have to be deep at all, because this breakout, if it is genuine, it's not going to look back. If it goes back into the trading range, then question marks arise on the nature of the breakout itself. So we want the stops in the morning were 85.50, and as we close for the day, the stop should be raised to 85.80, and that's and probably tightened tomorrow.
Okay, let's do one thing. Let's take a break. We're still trading with a lot of strength. So when we come back from the break, we'll get you a check on what's happening in the dealing rooms today with Nimesh Shah. Stay with us.
Welcome back. Well, 301 point higher on the Sensex and Nifty at 8637. Let's get some more technical trading ideas because this market is breaking out. Rahul Mohinder is also with us. Rahul, hi, good afternoon. What's on your list?
Good afternoon. I think to start with, I'd be looking at buying into names like SAIL, Reliance, and just to put some numbers to it, SAIL with a 46 stop loss, I think we'll definitely in the near term see targets more towards 51, 52. So I'd buy in at current levels. Reliance Industries has been a laggard, but it's kind of moving out of that 4 or 5 day range that it got stuck in. So we think 1060 odd would be a reasonable target to be looking forward for on the stock. And finally, Z is another stock we'll be looking at, Z Entertainment. You know, its previous highs of around 480 were made way back, probably I think in 2000 or 2001, and I think there's a good chance we conquer that and really enter into an uncharted territory. We're looking at 490 in terms of near-term targets. You know, we feel definitely the stock has the potential from a price volume perspective, so 455 being a stop loss, I'd recommend longs.
Okay, recommend longs in the market. That's what everyone's doing. And it's time now for our Monday special Mid-Cap Mania with Nigel D'Souza. The stock on his radar is an underperforming real estate company which has huge unsold inventory in the prime location of BKC. Nigel, take it away.
That's right, Sonia. The stock that we're talking about is Sunteck Realty. And if we take a look at it, it has massive developable, saleable land. That's around 24 million square feet approximately. But their share in this particular venture is only around 12.5 million square feet or thereabout. But as you said, yes, it's been a big underperformer. If you take a look at a couple of stocks, a lot of real estate stocks have moved quite a bit in FY17 itself. But Sunteck Realty is sitting with a gain of only around 12%, though in the recent past it has moved considerably. Now, the big question is there value? Remember, the company follows project completion method. So if we're looking at revenues, margins and all, they count for little. You need to look at what exactly is their finished inventory and then take a discounting cash flow to get the real value of the company. That's why I came up with this chart. The market capitalization currently is around 1,600 crores. They have unsold completed inventory at BKC itself. That's more than 2,100 crores. So that's important. That's, you know, in a prime location of BKC, there's no much oversupply as well there. So I'll be watching that very, very closely. And projects under execution, that's in BKC as well as in Goregaon. That's nearly around 2,100 crores. Keep in mind, they have loans of close to around 700 crores that they borrowed at roughly around 10.5 to around 11% or thereabouts. Now, the big overhang on the stock really, there was a lot of talk that Kotak Alternate Opportunities Fund, they held around 36 lakh shares in the company. We have seen a couple of big block deals just in the last 1 month. So one block deal, we saw Kotak exiting close to around 22 lakh shares or thereabouts. And also we had another big block deal of around 5 lakh shares that got traded. We don't know the buyer or seller of that. But maybe that was, you know, we could be watching out for more block deals, but that could be a bit of an overhang that was on the stock. The promoter holding is at around 74%. Let's get that chart up for you. Promoter holding at around 74%. We had a big FI in there that has around 4.2%, and Ashish Dhawan as well has around 1.8%. Short point, it's a very tightly held company. Finally, maybe the risk could be they're sitting on such big inventory. What if they can't sell it because the size is very big? The ticket size is rather big. They're skewed towards the Mumbai market. We have seen they've been doing joint developments as well in the past. And also they've been doing various partnerships with PE partners. Maybe in fact this is a stock that has been a big underperformer. But that inventory and liquidation, that's going to be the key. Back to you.
All right, Nigel, thanks a lot for that. So that's the stock on Nigel's radar. As a standard disclaimer, these are not recommendations. These are just some observations on individual stocks. Let's get an insight into dealing room chatter. Then Nimesh Shah is here with Trader Talk. Nimesh, good afternoon. More of the same, big FI buying, DI selling. What's the feedback?
Well, you know, the feedback is, yes, of course, there is a big FI buying. So markets are at a day's high, backed by very strong institutional buying. And, you know, the feedback today is there are some newer markets like Korea, Japan, which is flowing into the Indian market. So that probably explains the kind of strength we have seen in the large cap stocks in today's trade. The other aspect is that while we've been seeing the DI selling off late, that seems to be tapered off a little bit in today's trade. So it looks like there is a more of a one-way trade in today's trade, an aggressive FI buying and lack of selling by the DIs in the large cap names. So that explains the kind of move. Purely, you know, this is clearly a liquidity rally. You know, lot of dealers are confused with the way some of the non-index stocks have rallied in trade today. But clearly, you know, you can't defend the kind of you know, liquidity which is there in the system. And as I said, you know, newer markets like Japan, Korea are looking at putting into Indian markets. Two sectors which stands out clearly in trade today. One, of course, is the PSU bank stocks. The index itself is up 3.5%. Very strong moves in individual PSU bank stocks. Some bit of, you know, retail buying seems to be very active in that particular counter. And the other sector is the entire oil and marketing space. There was a Morgan Stanley report this morning. They have upgraded the earnings by 15 to 45% for OMCs in the next couple of years. And of course, this big mega merger is something which has pushed all the OMCs up. But clearly, you know, there are stronger hands now buying into the large cap names, and that probably explains the kind of move we've seen in the Nifty and in the Bank Nifty today.
All right, Nimesh, thanks a lot for that. By the way, keep an eye on Unitech. That stock has seen a big decline all of a sudden. That stock has had a good series. Of course, it's the last series for Unitech in the F&O market. It's been thrown out, and the stock has rallied from 3.5 all the way up to 8. But as we speak, there's quite a bit of thrashing that stock is receiving right now. Parag Thakkar is also with us. Parag, hi. Good afternoon. So what next for the Bank Nifty rally? Because you've seen huge gains in the likes of ICICI, even some of the others. But as some numbers would tell us, maybe some of these stocks could have run their bit and could be looking overvalued.
Yeah, I think across the sectors we are seeing panic buying right now. People were very moving towards safe havens and parking their money in negative bond yields, some $11 trillion lying there, or gold, and now suddenly people have realized that negative yield is not going to get them anyway. So I think there's a panic buying. So here you cannot justify valuations, or so for example Axis Bank reported numbers, and we all know that numbers were, and they had guided for it, so but there is no effect, and even after that all the Bank Nifty is moving up. So I think there is a panic buying going on right now. You cannot argue against it, but I would caution that as you rightly said, these are not the levels to go ahead and buy aggressively.
Okay, these are not the levels to buy into aggressively, but there is plenty of buying action, so you can't deny that. Just look at something like a PNB. It's up 8% now, and the volumes on PNB are mammoth today. Almost 3 crore shares are being traded on PNB. That's the kind of ferocity you're seeing in the PSU banks, and this is after a private sector bank like Axis Bank reported weak numbers. I don't know what this market is smoking, but it's definitely something very strong. Allahabad Bank is another one. Yeah, Anuj, go ahead.
Yeah, just the point that you made, Sonia, on PNB. PNB is also, almost approaching the trading ban in F&O market. I think Canara Bank is there. 3 or 4 PSU banks are there. And these are large stocks. So for them to reach F&O ban, you really need to have massive participation. So that's happening right now. The problem with PSU banks is that for a lot of these PSU banks, you don't have too much of floating stock. For example, I was talking to when we had the show with Prashant Jain about 6 months back, and his big call was that now is going to be the time of the PSU banks. He's been holding some large, the HDFC Mutual Fund has been holding large chunks of SBI, PNB, and a couple of other these banks in their accounts. So what's happening in some of these stocks is it's a bit of a scarcity right now. You don't have the stocks to really buy large quantities, and that's why you're going out and creating positions even in the F&O market, and that in part explains the kind of surge that you're seeing. And most of these stocks are still available at 0.3, 0.4 price to book. So that's why there's a bit of a mad rush to buy some of these stocks.
Oh yes, mad rush is correct. I mean, so many stocks are hitting new highs. By the way, the pocket to be in last week was the brokerages, or we call them brokerages, but now the NBFC companies. So names like Edelweiss Financials, JM Financials, all of them hitting new highs once again, all 52-week highs for these stocks. But Parag, afternoon, one of the stocks that you have been bullish on is from the packaging space, Moltech Packaging. Yes. What's the story there?
So basically, you see, it's a very small company with 530 crore market cap, 46 crore EBITDA. So they cater to mainly to paint companies and lube companies. So Asian Paints, Berger Paints, AkzoNobel, Kansai Nerolac, Castrol, Shell, all these are the customers. And interestingly, generally when you are a B2B supplier, you don't earn so much of margins. This company earns very good margins. The margins are around 17%, and asset turn is fantastic. You invest 15 crores, you get a top line of 45 crores, and you earn EBITDA of 17%. So incremental ROCs are also very good, and they are getting long-term contracts from companies like Asian Paints for contracts valid up to 10 years. And they have developed this IML technology where their cost is reduced, their realizations are higher, and a lot of employee cost is saved, and a lot of space is saved, where they can again put new machines. And when they put new machines, it's a shareholder value accretive situation, because the incremental ROCs are in excess of 25%. So this is a good company to be in terms of, and overall as a packaging industry, because of the good monsoon, overall FMCG volumes will go up, and that will help packaging companies.
Okay, but let's do one thing. So many buzzing stocks, so let's get a list of that as well. Here's Varinder. So Varinder, is new stocks as well today?
Of course, a lot many new stocks, but I'll start with some of the stocks which are showing movement based on results. Look at Kalyani Steel, that stock up 20%, Jayant Agro up over 15%, and Shesha Paper up 20%. Very good numbers, and all the paper stocks are buzzing on back of that. You asked about new names. Look at WPIL. That's an irrigation company, a pump company, and we are seeing good volumes compared to 10-day average. A new name picked up over there. Also, Blue Chip Tex Industries, Konart Engineers, ITL Industries, some other new names buzzing today. As I mentioned, after Sheshasai Paper results, all these paper companies, whether it's Nirvikra Paper Mills, Imami Paper, Star Paper, West Coast, all of them are gaining ground today. Some other small cap gainers like Pearl Polymers, Metallist Forging. Metallist Forging has actually gained nearly 50% in the last 10 days or so. Daily huge volumes on that stock. Shriyan Industries, Ganesh Benzoplast, Dhurt Industrial Finance, Associated Alcohol, Udaipur Cements. Also, the list of the mid-cap gainers is very interesting today. Look at Majesco. That stock is up over 15%. Satin Credit Care up over 12%. Kingfa Science up nearly 17-18%. Sudarshan Chemicals up 20%. Kirloskar Ferrous gaining over 10%. OCL India has gained nearly 25% in the last 3 days, gaining today as well. Jindal Stainless Hisar, again that stock has gained nearly 40% in the last few days. MRPL, Chennai Petro, Alpha Geo, Precol, RPG Life. Precol that stock is its own territory, gaining daily on huge volumes.
All right, Varinder, thanks a lot for that. So those are some stocks which are really buzzing around. Mr. Tulsian, I wanted your views. I mean, since Varinder was talking about, some of these NBFC companies as well. Indiabulls Housing Finance, what did you make of the numbers? It looked pretty good. I mean, 30% growth in the total income. Profits have grown as well. From here on, what's your call on the stock?
See, Sonia, I won't call that numbers as very great because firstly, I don't take YOY call on the NBFCs because you are on a continuous upward trajectory. So your disbursements, your interest income, your borrowings will all keep on increasing. So if you see on a QOQ basis, you will find that the results are flat, but no complaint because generally in Q4 again you have the residual figure or the balancing figure for the whole year minus 3 quarters. But so yes, the numbers have been good, but actually the two events, one is the recent income tax rate. Nothing has been spelled out that what kind of disclosure or what kind of things have come out from the company, number one. Number two, we are seeing the stock moving in a range of about maybe 680 to 740, 750. The range keeps moving up or down by maybe about 10 rupees or so. So because the share is now ruling at the upper end, I won't be taking a positive call on the stock to go long. Those who are holding profit booking can go for profit booking, and they're going to see the share coming back, maybe correcting by about 30 rupees or maybe 40 rupees, and that will be the right price to enter into.
Okay, that's Indiabulls Housing. By the way, in a really strong market, one stock which is weak is Dr. Reddy's ahead of its numbers. So clearly the market is sensing something as of now, and it is expecting subdued growth for the company. But keep in mind these numbers will be backward looking. But let's go close to Ekta. She has done a poll on what to expect. Ekta, of course, the market is abuzz with some poor numbers. But what are your expectations?
Well, it is expected to be a subdued quarter for Dr. Reddy's, and that's because of the pricing pressure that we are going to see in the US, plus the kind of write-down that we saw in the Venezuela business, where the Venezuela business didn't really generate any sort of revenue for them in the previous quarter, and that is expected to continue into this quarter. But the street wasn't really factoring any sort of one-off, though going by what the whisper numbers are on the street, maybe we could expect some amount of exceptional to come through this time round as well. Now, in terms of the US business, remember that they have been facing competition in their key drugs such as Valside generic as well as Vidaza generic, and the overall US business is seeing competition on a base business for most companies. So Dr. Reddy's should be a part of that and hence see their decline from the US business or sluggishness, which would impact the total amount of sales. India business likely to outperform with around a 13 to 14% growth, but remember that we do not know what the impact of the FTC ban would be. Remember that there is a stay order on the fixed dose combinations and which ones can be out of the market, but nonetheless there are some companies that have already pulled out some of those combinations from the market. Separately, national list of essential medicines, so any sort of impact on account of that in the domestic market would continue to on the overall numbers. Again, we will have to wait and see what takes place with the Venezuela business, but my sense is that commentary is also going to dominate because, like you mentioned, Anuj, these are backward-looking numbers for Dr. Reddy's. What they're doing with the current status of remediation on 3 plants which have a warning letter currently would be important and could possibly even be something that overshadows the stock in terms of if they deliver weak numbers and if the commentary is good and positive.
Okay, thanks for that. So those numbers coming out tomorrow. In fact, tomorrow is a heavy day. We have the likes of Maruti, TVS Motor, United Spirits, Dr. Reddy's, Bharti Infratel, a whole host of numbers coming in. So we'll do one thing. We will get you some macro opinion and then come back to the final moments for the market. Udayar Mukherjee caught up with Krishna Kumar of Eastspring Investments earlier in the day in an exclusive conversation and began by asking him about his outlook on the market and earnings. Listen in.
Yeah, it's been a bit volatile and it continues to be a bit volatile. I think the global markets are obviously not very helpful. India, in the scheme of things, is the only bit of an island where we see earnings growth. I have a fear that it's being exaggerated and possibly a bit back-ended. I really hope that the fact that the delivery is more sanguine and possibly real in the second half, because the first quarter obviously has not been a great start. I believe that the global markets could get a little more volatile in the second quarter, but I think the second half should be relatively better.
Why do you think global markets will get volatile in the second quarter? Because, you know, there have been many problem pockets which have cropped up in the last quarter or so, Brexit included. Yet the S&P in the US is trading at all-time highs. Markets seem to be just dismissing any of the problem areas which are cropping up. Is your concern related to what the Fed might do, or why do you think volatility will come back later in the year?
So it's a very awkward market. You know, there are a variety of reasons. I'll probably touch upon a few. The awkward bit is the fixed income guys are looking for capital gains, and the equity guys are actually looking for yields. So it's completely warped. The fact is, there are a number of events which are happening globally. Interest rates are all-time lows, and obviously that's not helping growth. In spite of being so low as they are, you still don't have growth or any signs of any growth. So the obviously alternate asset that you think about is equities and commodities, where you've got to go and invest more monies because you're not making money elsewhere. A couple of other things which are important, I think, is China, where there is rate action which is pending. Chinese rate action will have an impact on commodities, and that's where one needs to kind of keep an eye. The fact that these changes as they happen tend to become more volatile, and less things which are anticipated, start cropping up. And the reality is, we live in a world which is so uncertain and zero growth, as you see. So it will be volatile because things will settle down. People will look out for assets which are cheap. People will go out and look for materials, commodities, whatever be it. And the fact that, you know, at these zero rate environments, even that is not driving consumption. So it's a very awkward kind of a marketplace, and that's what will cause the volatility.
You would say that the calm that we are seeing in global markets is an uneasy kind of calm then?
Yeah, think about it this way. I mean, even globally, I mean, all brokerages are a benchmark. In a bull market, you have volumes which are peaking, topping the previous highs. A classic example is the Indian markets. I mean, the foreign brokerages are running at about 30 to 50% below previous year volume levels. It suggests to you that there is very little participation. And the fact that it is running away or going away wherever it is, the fact that, you know, there is retail money chasing it somewhere in some form or the other. And so that's what is causing this kind of a bit of a turmoil.
Okay, and you can watch that entire exclusive conversation today at 5:30 p.m. and 8:30 p.m. only on CNBC TV 18. But let's drill it down to the last 5-6 minutes of trade. It looks like it's going to end very well for the market. A good start to the week, almost 300 points higher. And a lot of mid-cap earnings have been good this time. HOEC's numbers look good. There's a one-time gain that they've seen of 11 crores. So that's boosted the numbers this time around. But that stock is up almost about 4.5%. Parag, from the list of earnings that have come out so far, what has impressed you enough to put more money into that stock?
So basically, IT companies definitely reported a disappointing number, especially Infosys, Wipro, all that. But they'll become great buys at some declines from current prices also. They'll become good contra buys like Pharma was some time ago. So that is a place to watch for. Otherwise, I think banking, almost all results mostly are pending, apart from private sector banks which they have declared. So PSU banks are pending. So I would like to One of the companies which reported excellent numbers today was Kalyani Steel, and it continues to report excellent numbers. It continues to reduce its debt. Last year EPS was 26, I think, and this time it will be much more than that. So these are some of the steel companies will definitely report very good earnings this quarter. I think JSW Steel should report excellent numbers because they expanded their volumes also in last quarter. They took shutdown and they increased their capacity, and plus this MIP effect will also come in.
Oh yes.
So both will come in. But overall, I would say that I remain extremely bullish on auto components as a theme.
Okay.
Because of sorry.
Sure, Parag, just hold on. There's so many numbers flashing on the screen. That's Hitachi's numbers. Net profit of 69 crore versus 46.5 crore. If that is purely a numbers, net profit number driven by operationals, that's a strong performance, as strong as they count. Really, I mean, asking for 50% profit growth in this environment. That's the total income, 850 crores versus 708 crore. I tell you something, this comes down as a really good number for Hitachi Home, and consumer durables clearly could be the space in focus. And just to give an example of this home improvement, couple of other names, let's also pull out the intraday chart of Asian Paints, because that's an index stock. And why I'm talking about Asian Paints right now is because it's hit a market cap of 1 lakh crores. It's now valued at more than 1 lakh crores. 2.5% higher on Asian Paints is what we have, and that's taken its market cap to above 1 lakh crores. But Hitachi Home is really the number to watch out for. 8% higher now on that stock, and it looks like a good set of numbers.
Yes, and Anuj, there's no exceptional item. It's purely an operational beat that you're seeing in the numbers for Hitachi Home. And just to tell you, last quarter was not such a great quarter for them. There was a bit of a blip, but this quarter they're back on track. So 853 crores in terms of revenues compares to 400 crores last quarter. So it's a doubling of revenues on a quarter-on-quarter basis that you've seen for Hitachi Home. And I think that's the relief rally that's really playing out on the stock right now.
So the sales have gone up 20%, but profit has gone up 50%, and that's the benefit of these companies. Even if they improve margin by 0.5% or 1%, you can see this kind of move. Mr. Tulsian, looked at the stock, Hitachi Home? Okay, I think we have some audio problem with Mr. Tulsian. Let's try and see if we have the connection back with him. Mr. Tulsian, Hitachi Home up 9% right now.
Anuj, I've seen the results, but this kind of results were expected from all the consumer durable companies. But what will be the problem? If you see Hitachi Homes in the last Q2, that is September quarter, they posted a loss. In Q3 again, the flat kind of performance with the income will be falling substantially. Because if you really see this June quarter, because of the scorching heat and because of the homes getting shifted or new homes getting set up in the prior to school opening, you always have these kind of performance coming in. So I won't be too excited to buy the Hitachi Home now after a run up of 10%. I agree that on a YOY basis the growth of about 33% has been shown on the bottom line, but because of the operating leverages, that kind of growth in the bottom line was expected, because there has been an increase of about 18 to 20% on the top line as well. But Q2 and Q3 again will be very lull and dull, so that will keep you dragged into the stock maybe for next 6 months or so. And even March quarter can only will start showing some kind of uptick. So I won't be taking a call on the stock merely based on, because these are just the historic. Future is not future pipeline for next 2 quarters are seen flat.
Okay, yes, and just to carry forward Sonia's point, last quarter was bad, so got to put things in perspective. But for now, the stock is up 8%. Also keep in mind, it's that kind of a market which is hungry for ideas. Just about 1 minute left for markets to close, so let's just do a quick recap. Today was an interesting day. Today was a day of really all the economy stocks. So whether it was paints, whether it was consumer durables, whether it was PSU banks, all these stocks rallied today. Some of them have valuation comfort, some don't. But in terms of individual stocks, BHEL was your top gainer, up 5%, but PSU banks rallied. So Bank of Baroda, SBI, PNB, which is not an index stock anymore, but that also was the big gainer. Top contributor to the index included stocks like HDFC, ICICI Bank, ONGC, Tata Consultancy, big day for that one. Mahindra & Mahindra 1.5% higher. You'll see a lot of 1 to 1.5% moves today. Ambuja Cement, HCL Tech, HDFC Bank, Bharti Infratel, Bharti Airtel, Power Grid, ITC, Asian Paints, as I just said, hit a market cap of 1 lakh crores. So all these stocks doing well. There was only one notable loser, Dr. Reddy's, ahead of its number. That was down about 3%. Sonia, after a long time, I can say that large caps outperformed, but not to say that we didn't have mid cap gainers. big buzzing stocks here again.
Oh yes, Anuj. And you know what? The good thing is there were a lot of stocks in the broader markets that had good earnings this time. I agree that maybe from the frontliners, the earnings have not been that good, but there were some solid performers in the broader markets. Navin Fluorine, look at that. Very good numbers coming in this quarter. Transformer rectifiers, it's really transformed. I mean, it's been an earnings turnaround for that company. So transformers and rectifiers in the green. Shanti Gears, the stock went up 6% after a solid set of numbers. Kalyani Steel, 20% post its earnings this time. Hitachi Home, 52-week high. I think it's a record high for Hitachi Home, if I'm not wrong. Post what is a very, very good quarter, bounced back there. Havells, 52-week high, post a very good quarter. Indiabulls Housing, decent 30% growth in its income. So, there were plenty of mid-cap gems that have reported good numbers this quarter, and the market has rewarded them. If you look for losers, it's hard to find, but the usual suspects, Suzlon, Unitech, JP Associates, Subex, all under a tad bit of pressure. But it's really the gaining lot that takes your breath away. Look at Precall, a stock like Precall, 11% higher on Precall today, been hitting new highs. And this whole brokerage / NBFC community has been gaining by the minute. Edelweiss Financial is now up 7.5% today at a new 52-week high, and so is JM Financial. So there were plenty of gems in the broader market.
Oh yes, Edelweiss has really been one strong stock, and it's moved after years of underperformance, and that one is up about 7.5%. The market sensing something on that one. We spoke about Navin Fluorine. I distinctly remember, Parag, HDFC Securities has a coverage on this stock, and you've been pushing this stock for the last 2 quarters, but at current levels, would you still have a buy on this?
So see, as I told you, that markets are right now doing some sort of panic buying. So whenever there's a good set of earnings, market just just take it up by 10, 15, 20%. So I would not say that I would participate in this kind of a euphoria, but company is very good. Directionally, they are moving in very right direction. They are debt-free company, and they are focusing more and more on high margin CRAMS business. So company is in right track, no doubt about it. But you have to also see valuation. So I would wait for some correction in the overall market for me to buy aggressively.
Okay, wait for some correction in the overall market. We have Mayuresh Joshi also with us. Mayuresh, I was just rattling out the list of good numbers that have come in from the mid-cap space this time. Hitachi Home, Havells, Transformers and Rectifiers, Navin Fluorine, Shanti Gears. Out of this lot, anything that you are still bullish on where one can put more money in?
No, again, Sonia, I think the Transformers space is something that I'll continue to be very optimistic about. Yes, great set of numbers by Transformers and Rectifiers, but the larger space and the larger story looks very, very encouraging at this point of time. With expected burgeoning of order books expected to come through the next few quarters, the margins will see significant amount of improvement, and if that happens, I think the cash flows and the capital ratios will improve significantly over the next 2 to 3 years. So as a space, I think Transformers and Rectifiers, along with other companies within this space, is something that I'll remain optimistic about. But yes, I think the other companies also, as you mentioned in the list, exceptional set of numbers, whether that be Navin Fluorine, whether that be to a certain extent even Rallis. So to that extent, I think the stocks have done well. But Transformers as a space or as an industry should do well over the next 2 to 3 years.
Okay, well, on that note, gentlemen, we will have to end this discussion. Thanks so much for joining us. The Sensex is at the highest level since August of 2015. So it's a 52-week high, 11-month high, whatever you'd want to call it. The bulls are in firm control of this market. And we've had some pretty decent numbers coming in from some of the broader market performers as well. Our closing bell money control question of the day, though, is a comment that came in from our market master today.